Good evening. You're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking at this hour. Markets consolidate at record levels after a bumper week on Dalal Street. Major indices rally 2% this week, with PSU banks gaining a whopping 30%. Maruti Suzuki hits the bullseye in the second quarter. Profits and sales beat expectations. Margins expand by a whopping 220 basis points above estimates. Cigarettes and FMCG major ITC reports a 7% rise in revenues in the second quarter. Profits meet expectations even as margins shrink compared to last year. The queue of bidders for SR Steel gets longer. Sources say 8 players are in the fray, including SR's promoters, Tata Steel, Nippon Steel, ArcelorMittal, Vedanta and Steel Authority of India, among others. That's another exclusive. Torrent Pharma in advanced talks to buy Unichem's domestic assets. Sources say the deal could be valued at $500 million and is likely to be announced soon. That's an exclusive. Satellite images from 6th of September show that Chinese troops are amassed near the Doklam plateau, armed with tanks and missiles. India and China had announced that the standoff was peacefully resolved on the 28th of August. Chhattisgarh police arrest journalist Vinod Verma in the wee hours this morning on charges of extortion. The journalist tells Network 18 that he is a victim of a political witch hunt and claims to possess a sex CD of a Chhattisgarh minister. It's a power-packed show with the next 30 minutes this Friday evening, but let's get straight to the market action of the day first. Stellar week with a lackluster last day. Markets consolidated today after a bumper rally that was seen this week. Nifty ended flat with a negative bias, but the index saw a gain of about 1.7% for the entire week. Sensex continued to end at record highs and gained about 2% for the week. The star of the week was clearly the PSU Bank Index. It gained a massive 30% for the week, of course, at the back of the PSU Bank recapitalization story. On the flip side, private bank index gained a meager 1% for the week, a feat seen after a long time. Let's bring in Anuj Singhal, who is here with the wrap of today's trading action. Anuj, after a steady week for the bulls, it was a lackluster day for them.
Well, very sort of sideways day for the market today. The bank Nifty was dragging. It started with a gap down, recovered intraday, but by the end of the day, it was once again down. Though it was a good day for the mid-caps, a lot of stocks did well. The stocks that dragged the market today included names like Yes Bank, State Bank of India and Reliance, while other Nifty losers included the Bharti Twins and Hindustan Unilever. Add OMCs as well, because IOC's numbers looked bad. And HP and PP were also down because of that. On the gaining side, though, Bajaj Finance got its mojo back, so that stock has been rallying now. ONGC and Sun Pharma were also gaining ground. But really have to spend some time on United Spirits. That stock was really a stock of the day. Huge move, breakaway gap, post the numbers, and phenomenal buying on that stock. EIL and Heidelberg Cement were the other ones where we saw some buying. The mid-cap PSU banks, especially the weaker ones, are correcting. So IDBI, Bank of India, Allahabad were all down. The market tomorrow, of course, will react to ICICI Bank's numbers. That could be a bit of a decisive factor. But for whatever it's worth, the Bank Nifty is making a bit of a heavy meal of its all-time high of 25,200.
Okay, Anuj, let's see if bulls come back refreshed after the weekend. But let's talk about earnings now. Cigarettes and FMCG major ITC reported a 7% rise in revenues in the second quarter. The net profit came in higher than what we were expecting at 2,640 crore rupees. Margins, however, contracted on a year-on-year basis, coming in at 36.5%. That stock was, of course, up and about in trade at the back of the earnings. But the big auto earnings for the day, Maruti Suzuki, India's top-selling car maker, reported an impressive performance in the second quarter of this financial year. It managed to exceed street expectations on almost all parameters. Naveen Shetty, who has been doing all the number crunching, is here with the details. Naveen, how do the numbers stack up and what led to the surprisingly upbeat performance?
The numbers were on top gear, Kritika, if I were to say in that context. Now, talking about the numbers, I'll begin with the EBITDA margins, which were the biggest highlight. Remember, the EBITDA margins came in at around 6.9% versus what we were expecting. The street was expecting around 14.7. Beginning with the top line, if you see, the top line grew by what, 21.8%, 18% volumes we already knew, but 3.6% of the growth in the realizations that have come, tad below what the street was expecting, but nevertheless, thumbs up is what the street has given. On the other hand, margins were led by gross margins. Remember, the gross margins increased by 100 basis points, which led to a growth in the overall margins by around 16.9%. This is what the EBITDA margins have come from. Also, remember one thing, one niggling worry was that the ramp up in the Gujarat plant that was happening, that would have led to a bit of negative operational leverage, but that wasn't the case when the final numbers came in. Also, PAT, we were expecting a PAT of around 2,220 crore, but the profit after tax came in at around 2,480 crores. Remember, on the other hand, we also saw the other income falling a bit. So this PAT that have come is purely on the basis of the operational efficiency that the company has been showing. Remember, in terms of valuations, yeah, Maruti looks a tad bit higher, trading at around what, 27, 28 times FY19 multiples, almost 40% ahead of its peers. But still, nevertheless, these numbers seems to be justifying those kind of valuations. So thumbs up from the markets on Maruti numbers. Back to you.
Okay, Maruti in top gear. Thanks, Naveen, for joining in and breaking up the numbers for us. We are awaiting another important set of earnings this time from the financial space. ICICI Bank will report its second quarter earnings any time now. The street is closely watching for the slippages figure. Any figure below 5,000 crore rupees will be positive for the stock. Profit is expected to decline 18.6% year on year to 2,525 crore rupees, but may increase 23% sequentially, according to a CNBC TV18 poll. Net interest income during the quarter is seen rising by about 8.5%. Management commentary on stress loans will be crucial, especially after bad asset quality performance by Axis Bank and Yes Bank that was seen over the last few days. Time now for a big voice from North Block. Finance Secretary Ashok Lavasa believes that the government plans to recapitalize public sector banks by 2.11 lakh crore rupees should be considered as an investment and not really looked upon as an expenditure. He spoke to my colleague Sapna Das earlier in the day. Lavasa also hinted that they were open to looking at methods that were adopted in the past in order to infuse capital into PSU banks. Here's a slice of that exclusive interview.
The mechanism for issuing the bonds and injecting this capital in the banks is being worked out, and government is open to looking at various models which are available, and some of them have been tried in the past, on how to capitalize the banks, how to raise this money, and how it is reflected in the budget. So the possibility of banks buying these bonds is also one of the possibilities that will be explored. But as we had clarified, that this is still work in progress, and after due deliberations and considering all possible methods which are available, then government will finalize the road ahead.
So what could be the other options on a very rough basis, if you could just help us understand, rather than actually telling us what it is, but help us understand what could be the other options. Somebody has even spoken about probably a holding company structure, but we are not very sure whether that's the way it may work.
You see, there are many suggestions that have come, and we don't want to dismiss any suggestion straight away, but the point is that it must be recognized that this is an investment on the part of the government. It is not expenditure in the classical sense of the word. So this money which government will invest should not have any impact on government's other expenditure on development, on other schemes which are going on. So we need to evolve a structure in which that commitment of the government for development spending does not get diluted in any way. So that is the overall overarching objective or framework within which we'll work.
Right. So also we understand that this will not impact the fiscal deficit target, so to speak. But will it find a mention somewhere in the debt picture overall, or even not probably even over there, because if it's a capital investment, then it's a capital investment. Please help us understand.
No, but one thing which we have always stated is that government wants to be very transparent about whatever is done. So various alternatives about where to reflect it, below the line, above the line. I think those things have been mentioned. But one very clear thing which we have in our mind is that whatever is done, it has to be done in a fair and square manner. It should be appropriately disclosed so that people have an idea that this public money, which has been spent in a sense, although it is invested, where is it going and how does it affect the accounts of the government? It is a debt as far as raising the bond is concerned, so it will add to the debt of the government of India, and this debt will get retired over the passage of time. So the actual expenditure burden would be the interest which will be paid for servicing these bonds.
So the chief economic advisor on that front has already indicated that probably the burden may be somewhere in the region of 8 to 9 odd thousand crores. Probably, the last quarter of the current financial year, 4 to 5,000 crores. We really don't know what those numbers may be. This is a very minimal amount. This is something that the government can always factor in.
We will try and find space for this expenditure. And since we are already halfway through the current financial year, the burden for the current year would depend on when these bonds are raised, what is the quantum of these bonds, and how much is the period left for servicing during the current financial year. So within the overall budgetary ceilings and the fiscal deficit targets that we have, the available space we have, we'll try and find a way.
Okay, time now for a quick break. But up next, the queue of bidders for SR Steel gets longer. Sources say 8 players are in the fray. We'll get you the details after the break. Stay right there.
वीडियो गेम है क्या? Investing is a serious business, requiring years of research.
Narnolia.
It is the precise little adjustments that make a great difference. That's why I only trust the experts.
Every 5,000 kilometers, visit MRF Tires and Service. Our experts check your tires for accurate balancing, precise alignment and purest nitrogen, so you get the perfect drive every time.
Because it's the little things that make the big difference.
MRF Tires and Service, the experts in complete tire care.
In a span of 4 decades, the Noida-based Motherson Sumi Systems has carved a significant market share in the auto component space globally. Catch the promoters and industry experts as they decode the success mantras of this homegrown company. Decoding Business Growth Season 3 at these times.
Presented by ICICI Securities.
कड़वे सवाल पूछने के लिए
राजनीति कौन कर रहा है? आपकी सरकार फेल हो गई है।
हम तो पूछेंगे ने बड़े शहरों में रात 8 बजे आज तक को पछाड़ा। देखते रहिए हम तो पूछेंगे न्यूज़ 18 इंडिया पर।
Watch the highlights from the full-day conference where 50 startups were recognized and rewarded for scaling up their ventures successfully at the Smart CEO Startup 50 Awards at these times only on CNBC TV18.
Presented by the Smart CEO and IDA Ireland.
क्या होटल डील्स के लिए आप बहुत सारे वेबसाइट्स पे जा रहे हैं? बंद करें अपने आप को परेशान करना और आपका ये काम Trivago को करने दें। Trivago एक साथ 100 से भी ज्यादा वेबसाइट्स और एप्स को आपके लिए कंपेयर करता है। It's that simple. Hotel Trivago.
Get a holistic view of the financial planning journey of Rajesh Sondhi.
You do not have to exit SIPs. They have to be very long term. 5 years, 10 years, you look. And don't look at your portfolio every time.
Watch Mutual Fund Day Family Financial Plan series at this time only on CNBC TV18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. The race to acquire debt-laden SR Steel is gathering steam. CNBC TV18 learns that as many as 8 players have responded to the insolvency professional's call for a resolution plan for SR Steel. Ritu Singh has those exclusive details. Ritu, you were the first to break the companies that were looking at this. What is the status now? Looks like SR Steel is generating a lot of interest from bidders.
You know, if you look at the cases that have been identified for the insolvency and bankruptcy process by the Reserve Bank of India and otherwise, SR Steel is one such case that has by far generated the most interest from both domestic and overseas players. In fact, we understand from sources as many as 8 players have responded to the IRP's request for submission of a resolution plan. In fact, these are expressions of interests that have been submitted by these 8 players as of earlier this week, which is when the deadline ended. The final bids, we understand, will only come in by January after the due diligence process is over. So who are these large names? They have marquee names from the domestic market. First, of course, Tata Steel is one of the players. There's SAIL that has expressed an interest. We also have the likes of, ArcelorMittal, Vedanta Group, as well as Nippon Steel from the overseas players. SSG Capital and Aeon Capital, also funds that have expressed an interest. Of course, at a later stage, they could tie up with a strategic player for finally taking a strategic stake in the company. And lastly, the promoters themselves, that is the Ruya Group, the Ruya family, has also submitted an expression of interest. They could tie up with a financier, of course, to make these final bids. But yes, many players here in the fray for this asset, where the debt, remember, is over 45,000 crore rupees. Now, of course, who the final bidder will be is something that remains to be seen.
Okay, Ritu, thanks for that. 8 players, including marquee names like Tata Steel and ArcelorMittal, looking at SR Steel. So let's move on, and here's more, in fact, from NPA resolution space. Anuj Jain, the insolvency professional in the JP Infratech case, has invited expression of interest from players to complete the company's delayed construction projects. Now, among the criteria mentioned for shortlisting bidders is a minimum net worth or an AUM of 1,000 crore rupees as of FY17 and an ability to invest 2,000 crore rupees in the construction project. Now, Jain has also asked interested parties to ensure the protection of home buyers' interest by way of timely construction and possession of flats. Now, there is a mega deal brewing in the pharma space. We learned that Ahmedabad-based Torrent Pharma is in advanced talks to buy Unichem Laboratories' domestic business. Nisha Poddar, who broke that story, is here with the details. Nisha, Unichem has been on the lookout for a buyer for some time now. What are the chances that this time around the deal will go through?
So it could be a large transaction for Unichem and end of its also journey to find a suitable buyer for its domestic-focused businesses. So Unichem and Torrent Pharma are in advanced talks, is what we gather from sources with direct knowledge. Torrent Pharma is essentially interested in the brand portfolio, the products which are focused towards the Indian market, and that could be worth about $500 million. Now, remember, we are talking about a portfolio which clocks in a revenue of close to about $130 million. If all goes well and if the deal really fructifies, it could be announced next week itself. Remember that Unichem has deferred its board meeting for the result announcement as well, and Torrent Pharma's result announcement is slotted next week. Now, remember that it is a win-win for both, because Unichem has been looking at a buyer in the face of lack of scaling up the existing businesses for the company, and on the other hand, Torrent Pharma has been looking at enhancing its portfolio.
Okay, Nisha, thanks for that. Now, moving from one deal story to another, KKR's plans to pick up a sizable stake in Bharti Infratel has been put on the slow burner. Sources say that the reason could be the rise in the Bharti Infratel stock price. The KKR-led consortium offered close to 380 rupees per share of Bharti Infratel to conclude the deal. Now, remember, this year in August, Bharti had sold about 3.7% stake in Infratel at an average price of 383 rupees per share. Both KKR and Bharti Airtel did not comment on CNBC TV18. And look at the Bharti Infratel stock. As soon as we broke that story, it fell by about 2 to 3%. It was down by the end of the day even further by about 8%. We'll have to take a quick break, but up next, satellite images from 6th of September show that Chinese troops are amassed near the Doklam plateau, armed with tanks and missiles. Latest developments on that story when we return. Welcome back. Fresh reports of a standoff between Indian and Chinese soldiers at Doklam have emerged. Satellite images from 6 September show Chinese troops armed with camouflage tanks and missiles. The development follows the withdrawal of troops on August 28th after an agreement between both the countries. Okay, I believe the ICICI Bank earnings figures are out. We were expecting, there you go, we have the first set of numbers. Net profit has come in at 2,058 crore rupees. We were expecting net profit to come in at 2,525 crore rupees. So it is a bit of a miss as far as net profit is concerned. Net profit at 2,058 crore rupees. We'll get in Lata, Abhishek and Ritu perhaps yes, we have Lata with us. Gross NPA is also coming at 7.87% versus 7.99% on a quarter-on-quarter basis. Lata, have you had a chance to go through the numbers? How do they look like?
No, we are as yet still opening the financial results. On the face of it, the NPA number looks like there are no heart attacks, but we just have to wait and see whether there are no divergences. That's the key word that we have to look at. It at the moment actually looks like a good set of numbers. But let's just wait for the entire press release before we come to any conclusion. The gross NPLs have risen by only 1,000 crore. It was 43,000 crore. It is now 44,000 crores. So to be precise, by 1,200 crores, the gross NPLs have risen. That looks like a good set of numbers. But let me just go down and see that dreaded word divergence, if it is there. I can't see it as of now. Let's just wait. Those are the things that it's not there, if I'm not mistaken. Yeah, here is the auditor's report. No, there's no divergence. Now, that's a very big thing. That's very positive. Of all the private sector banks, the big ones that have lent to corporate sector, I can't see any divergence. I can go through the notes to accounts yet again, but we really don't have anything adverse that has been reported in terms of, okay, let me go line by line on through the notes to accounts. No, there isn't. There isn't anything representing.
Lata, there is slippages. So the slippages is at 4,674 crores. That compares to about 4,976 crores. I'll just read the line. The gross NPA addition declined to 4,674 crores in Q2 as compared to 4,976 crore in Q1. So that roughly represents the slippage picture, which has actually reduced on a sequential basis.
No, the gross NPA addition, okay, maybe you can say because they're calling it the gross NPA addition, that would be perhaps the slippage number. But I think the important point is that that itself will be taken as extremely positive news by the street, because we had this big fear that there might be yet another asset quality question that was not recognized in FY17 and which had to be recognized now. Remember, ICICI Bank is coming to the table with already a 7.9% NPA number, and therefore the expectation is that practically everything had been recognized. If at all there would have been any disagreement between the regulator and ICICI, it must have been less than 15%. Only if it is above 15% of the total NPAs, that is, the disagreement should be over 6,000 crores. Only then ICICI would have to report. But in any case, the total gross addition is only 4,674 crores. So it must be, if at all, any disagreement, very minor ones, probably three-digit ones. So I think ICICI sets itself up for a very decent rally, and I think we saw that in the dying moments of trade on Friday as well. So, now that, please go ahead. I think we can go to the NII now.
No, also NII, the other positive point is the loan growth. Let's not look at the YOY. Even that has improved if you compare to what they recorded in previous quarter. But loan growth on a sequential basis has come in at 4%. So remember, in Q1, the YOY growth was about 3.25%. So this time, Q1 to Q2, the absolute loan growth is at 4%. And on a YOY basis, it is at 6.3%. So the total loan book now stands at close to 4.83 lakh crores.
No, actually, the net NPA ratio has also decreased to 4.4%. That's an extremely respectable number.
That's because there is an increase in provision coverage ratio by
59%. Exactly. Yes. Almost 60% provision cover, which itself speaks very well of the way in which they have used their profit, the way in which they have used their pre-tax profit.
They have used ICICI General's money to make this provision.
No, I think they've written, including, that's further strengthening the balance sheet. It's a 90 19% year-on-year growth in retail portfolio, 21% growth in low-cost deposits, but that all banks have had. That's largely the demon effect. The net interest margin has come in higher at 3.27 compared to 3.13.
Sequentially, it's flat.
Yeah,
so sequentially
it's flat.
Yeah.
Okay, 3 point, but even that is
Even
good
that is
at
stable.
a time when there's
That is stable,
competition.
yes.
And finally, of course, capital adequacy is extremely strong for the bank at 17%. So no fear of immediate dilution and no fear of very big chunks being taken out of profit and set aside as provisioning. Already 60% of the balance sheet provided. So it looks like ICICI Bank is genuinely over the hump as far as bad loans are concerned. We will get more color, of course, when we meet the management itself. But we have a lot of experts joining us. Do you want to just give a word on the net interest income growth?
The net interest income has come in at 5,709 crores. Now, we were working with a number of 5,697 crores. So, slightly above.
In line. Okay.
Yeah, slightly above our number. So, that actually
That's a 9% rise?
Yes, that's a close to 8.7% rise on a YOY basis and about 2.13% rise on a sequential basis.
Okay. Well, I think we have the entire picture now, as you can glean from the press release and the P&L. R. Srishankar, Head Institutional Equities at Prabhudas Lilladher with us. Srishankar, your thoughts? No divergence, and the incremental addition is actually only around 4,000 crores, 4,600 crores to the NPA.
Yeah, I think it's more or less in line with expectations. That's what I would put it across. The big picture is our estimate has been around 4,500 crores in addition of gross NPAs, more or less around there. And in terms of the bigger plus point is no mention about any divergence. And let's see the call and whether the inspection has been already over. If there is, and then there are no divergence, it's extremely positive. And
well, to the best of my knowledge, the inspection is over, but you know, all this is sourced information, and I would think that you know, the inspection is definitely over unless the report had not been given by RBI, which looks a little unlikely. Yeah, go ahead, Srishankar. What would be?
I think we continue to like it. It's a part of our topic. I mean, I don't think that there is anything right now for us to change our thought process. And if all these things come as positive, then I think with this is one bank which is probably in a very strong wicket in terms of capital adequacy as well. The growth is back, and they have been addressing the issues. We knew that they have the problem. They first came and addressed. Slippages is something in line with what has been expected. So I don't think that you probably will have more surprises coming up later.
Oh, absolutely. I mean, the very fact that there has been no divergence in a large book like this is extremely positive. And all NPA figures, actually net NPA figures have gone down. They've used the money wisely and increased their provision cover from 55% to almost 59.5%. Manish Ostwal, your thoughts?
Yeah, so overall performance of bank net interest income and core operating performance, core operating profit, both are fairly in line with our estimates. As far as the asset quality is concerned, both gross NPA and the net NPA sequentially down, and slippage number also down compared to the quarter one, and no divergence. So in terms of asset quality trends, quite increasing, and within the corporate banks, the performance is stand out, and ICICI Bank continue to outperform the Axis and the other peers.
Okay, well, good to hear that. We have some more analysts joining us. Krishnan is joining us. He's the lead analyst at SBI Cap Securities. Your thoughts, Krishnan, from what you have heard?
Yeah, hi. So, I mean, what very clearly the key monitorable was the balance sheet. To the extent that there is no divergence reported, that's very commendable and a positive. Of course, as Sri Shankar mentioned as well earlier, a couple of other experts also mentioned earlier, it remains to be seen whether the divergence report has actually been factored into these numbers. But assuming that they have been, the fact that ICICI Bank does not have to report too much of a divergence, number one. Number two, the incremental slippages are within about 4,500 crores is what we expected, and this number seems to be broadly in line. I think those two will be fairly big positives. The P&L disappointments will probably be digested much more easily.
What will you wait for to hear from the management?
I mean, just the fact whether the divergence
whether the
has
report
been
has come or
factored into
not.
the September 2017 numbers, and I mean it clearly shows. Say for instance, if they are aware that there is the RBI report, they are in receipt of the report, and yet there is no divergence, or the divergence is less than 15%. It also means that ICICI Bank has learned its lessons from whatever track record or patterns they have seen in terms of the RBI.
What RBI wants.
Observation. So that's also a fairly credible sign. And I think that augurs very well for whatever re-rating that may take place in ICICI Bank.
Krishnan, just one question. You said P&L disappointment, but the fact is that they are prudent on the provision front. So they have actually strengthened the provision coverage ratio. So how do you look into that?
Yeah, so no denying. I'm just saying there are certain internals which, maybe you're able to see it in the P&L in front of you right now, and there are certain internals we will have to go through as well.
Fair enough.
To that extent, once we have those internals available to us, maybe we can take a more intelligent call on that. Yeah.
Fair point. Thank you very much, Krishnan, Sri Shankar and Manish for joining us. From what we have in front of us, it does look like it's a good set of numbers. Growth fairly positive, a 21% growth in 19% growth in retail deposits is not to be scoffed at, and NII growth almost 9%, not to be scoffed at, and no shocks coming in from any RBI inspection. The only niggling doubt, and I somehow don't have that doubt, is that has the RBI not yet sent its final report after the inspection? My sense is that that's over and done with, and the Reserve Bank's report has not yielded any serious divergences, not more than 15%, and therefore did not have to be reported at all. In any case, if it's only a 4,000 crore increase in slippages, it's a very good set of numbers. Clearly over the hump, as you can see in our bar chart, look at the way the gross NPA has moved, clearly now inching lower. So hopefully on the road to recovery. We wrap up this edition of this special coverage on ICICI. On that note, stay tuned to CNBC TV18. We're coming back with a very interesting edition of taking stock of a very interesting week.